This program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
Welcome back. There are about 2,100 homes scheduled to be auctioned this week. That's up 45% on the same week last year. The number is lower, though, due to the public holiday in Victoria, South Australia, Tasmania and the NT. New South Wales will hold about 1,100 auctions, with 918 of them in Sydney. Victoria will hold about 530 auctions, most of them in Melbourne. Queensland will hold about 300 auctions, with about 160 of them in Brisbane. South Australia will hold 130 auctions, with about 120 of them in Adelaide. Western Australia, Tasmania and the NT will hold 20 auctions between them. And the ACT, Canberra, will hold 50 auctions. Taking a look at the most viewed properties going to auction this weekend, in New South Wales, it's 72 Bergen Circuit, Leppington. This 4-bedroom house also includes a 2-bedroom granny flat. Property sits on about 550 square metres. Asking price is $1.1 to $1.2 million. In Victoria, the top property is 133 Whites Lane, Wheelers Hill. This 4-bedder has 2 bathrooms, a pool, space to park 3 cars. Asking price $1.2 to $1.3 million. The top property in Queensland is 23 Bluebell Street, Mansfield. This 5-bedder is being described as a renovator's delight. If you look inside, you can see why. The owners got creative with their painting. The top property in South Australia is 16 Dawson Avenue, South Plympton. This 3-bedder is being billed as a place you could knock down and rebuild. It's on 700 square metres. Price guide is $780,000. And the top property in Western Australia is 3 Porteous Road, Sorrento. This place is being described as a faded beauty. In other words, it needs a lot of work. It has 4 bedrooms and an abandoned pool in the backyard. And the most viewed property on the REA Group website this week is 38 Nollamara Drive, Eleonora in Queensland. This 2-storey 4-bedder sits in an elevated position close to the border of Queensland and New South Wales. The home's on a 512 square metre block. Inside, there's open plan living spaces, which open up with large sliding doors to the outside entertaining area. There's a timber deck, fire pit and a saltwater pool. The house has ducted air conditioning, an oversized garage. It's just 12 kilometres from Coolangatta Airport. The auction's scheduled for March the 30th. For more on property market, I caught up with Angus from REA Group a little earlier, and we started by talking about the solid number of auctions scheduled this weekend, despite the public holiday across a lot of the country.
That's right. Obviously Melbourne's going to be a lot quieter than we'd normally see around this time of year just because of the public holiday. But elsewhere in the country, New South Wales still looks pretty busy. Number of auctions up, kind of nearly 50% compared to where it was the same time last year. And Melbourne, this weekend aside, it still looks pretty busy. If we kind of wind forward to next weekend, obviously early days still, it's a week away, but looks set to be more than 50% higher than what we were seeing this time last year. And that's really been the theme so far this year. It has just been a lot busier in auction markets than we were seeing at the start of last year when things were pretty quiet.
How are auction clearance rates holding up right now?
It's been fairly solid thus far. So through this year, we're seeing Sydney and Melbourne bouncing around the kind of mid-60s most weekends, which is pretty solid. It's certainly better than we were seeing towards the end of last year at the tail end of spring when things kind of dipped down into the 50s. So looks fairly solid. And that's kind of consistent with what we're seeing more broadly. Prices have been pretty resilient. Again, prices were up 0.5% nationally in February. So, which is, again, consistent with solid, but, maybe not as strong as we were seeing in 2021 conditions.
And then you're expecting more and more stock to come onto the market before the Easter public holidays.
Yeah, that's right. We tend to see activity continue to ramp up as we get into the year towards the Easter public holiday. Things then start to quiet off after that period as we head into the usually quieter winter period. The fact that Easter's a little bit earlier this year means we might see activity run a little bit after that Easter break in a way that we maybe wouldn't in a year where it was a bit later, though.
Now, this week we got the GDP figures for basically calendar year 2023. And outside of the pandemic and the GST year, it was actually one of the weakest years of growth since the 1990s. Does that kind of help the argument the Reserve Bank may cut rates a little bit earlier in the year than initially expected?
Yeah, I think it certainly doesn't undermine the argument. Consumption in particular, household spending looked pretty soft over 2023, which, given what we've seen happen to interest rates, probably isn't a huge surprise. That said, it was probably broadly in line with where the RBA was expecting. Growth as a whole was more or less in line with their forecast. They were expecting pretty soft growth in their forecasts. So I don't know that they'll be hugely surprised. I don't know if it'll massively change their outlook, but it certainly doesn't undermine the case for cuts this year. And I think probably takes further rate rises, unless we get big changes in inflation, kind of off the cards.
Yeah, so if the RBA were potentially to cut rates a little earlier, is that going to do anything to your forecast for property price growth over this 12-month period?
Yeah, certainly if we see interest rates drop faster and sooner than we're expecting, that's going to be a tailwind for home prices. Our expectations for this year are we will see price growth, but probably pretty soft. And the reason we're expecting soft is just because of how strained housing affordability is. With interest rates where they're at, prices are very difficult for many, particularly lower and middle income buyers to afford. And so that's going to be a headwind for prices. But of course, if interest rates fall, that does start to improve that picture a bit and could help boost growth a bit.
Now, just on prices, also lending obviously key. We did see the lending indicators came out this week from the Bureau of Statistics as well. We got a chart we can put up on the screen with showing credit. What's this actually telling us?
Yeah, so I think there are quite a few interesting stories in that release, but I think this is kind of the one that's most interesting for me. And this is showing the investor share of new housing lending. And as you can see, it's up, and it's certainly well up from where it was during the pandemic. And it's actually kind of probably even around or even a little bit above what we might consider normal historically. And I think that's a big change from what we were seeing during the pandemic when a lot of investors were kind of leaving the market. We are starting to see a lot more investor activity. It's probably good news for renters. Obviously we're facing very challenging availability in rental markets at the moment, and bringing more investors in is kind of fundamentally the only way we're going to solve that in the long term.
And as investors, what are they looking to buy? Is it mostly apartments? Is that where they go?
We do tend to see investors focusing on apartments, though not exclusively. The rental stock still has plenty of detached houses in it, in part just because Australia has plenty of detached houses overall. But we do tend to see investors favour those smaller inner city 2-bedroom units that do predominantly make up, particularly in our largest cities, a lot of the rental stock.
And in those lending indicators, was there anything new about first home buyers that came up in the stats?
Yeah, I think first home buyers are one of the other interesting stories that we're seeing there, which is just they're a lot quieter than what we were seeing in 2021. And that really comes back to that affordability picture that we were talking about before. It is obviously very challenging for first home buyers at the moment. They are very dependent on how much they can borrow, because many don't even have a 20% deposit, and therefore how much they can borrow really dictates how much they can spend. And so with interest rates up as high as they are, a lot of them are finding it a lot more challenging than was the case a couple of years ago.
Angus Moore from REA Group, thanks for coming on the program.